India's specialty chemical industry has been bearing the brunt of muted global demand and declining chemical prices for the past few months. The sector saw its profits slump across the board in the recent June quarter as China's reopening and aggressive inventory destocking in the global market pulled prices lower. At the bourses, the stocks have corrected as much as 50% from their record highs touched over the past 2 years. Once considered expensive, the shares are now much cheaper as against their peak PE multiples, raising the question whether it's time to bargain hunt these stocks. Analysts, however, believe that the worst is not over. While the recent uptick in crude oil has moved chemical prices up, the demand slump is expected to continue.
So recently we have seen a lot of increase in prices of basic chemicals like acetic acid, methanol, ethanol, other things. Primarily because these things are all crude oil and gas derivatives. But because of demand issues, we have not seen that end product prices have been going commensurately. So as a result of that, we believe that although chemical companies have come off for their high valuations that we have seen in last 2 years, we still believe that there could be pressure on valuation and performance of these companies on the stock exchanges. So as a result of which, we don't think that these companies are attractive despite the downturn that we have seen in the valuations.
Echoing this view, analysts at InCred Equities in a recent note said that demand problems continue and raw material inflation will likely follow in coming quarters. Thus, it's not the right time to do bottom fishing in the sector as the bottom is still far away. Analysts expect the current fiscal to be a washout year for the sector. Hence, they suggest that investors with a longer time horizon wait for more correction before buying the shares in this space.
With the rising input price led by the crude, there could be a margin squeeze scenario that would be witnessed. We do not see any greater improvement in the financials for the chemical sector in the current financial year. If anything to happen, I think next year only that we should see any improvement. But this year could be a period of a washout. But I think in the longer run, targeting longer run, one can think about accumulating stocks. Accumulating in the sense, if post quarterly number stocks correct by more than 10%, then one should be ready to add further.
Among individual picks, Vinity Organics and Navin Fluorine are the top long-term structural plays as per Swarnendu Bhushan of Prabhudas Leeladhar, while Patra of Phillip Capital counts SRF, Aarti Industries and Gujarat Fluorochemicals as his top bets. Today, on September 8, the Lal Street action will remain stock-specific, while traders will also keep an eye on crude oil prices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.